Hello traders and Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. We have three stocks for you that are actually in a buying mode, and I want to share with you how that works. So first of all, we're looking at a stock is Amazon, a well-known stock, and you can see it's really just been going sideways for quite some time. It had the original breakout, but now it's moving sideways. But you do have the parabolic below there, but the important thing is you're right at the 50 line, which should provide good support. This seems to be like a low risk buy for Amazon. Plus our trade triangles are all positive. You can see them right here. And weekly and monthly, both positive. Just watch the line here and watch this to go higher. We expect Amazon to move higher, probably to the 450 or even 500 level. That's our next target zone for this market. Next stock we're looking at is eBay, which is a well-known auction site. They're doing a lot of business lately, it seems, but the stock is looking very, very good, and I tell you the reason why. Again, you have our trade triangle technology positive right here, and you have the 50 support line on the RSI indicator, which is right here, acting very well. So very low risk trade, in my opinion here. Probably should not go below 59, currently trading at 60.71, so it has made a turn and it looks like it wants to go higher from current levels. That's one of the stocks we're looking at. The next stock we're looking at is Alibaba. The symbol there is BABA, and this is a well-known site similar to Amazon, except it's in China. And what we're seeing here is we have the monthly in a positive mode, and we've had a pullback. So I'm going to use our Fibonacci tool right here. Click on the highs, drag it down to the recent lows, and you can see we're in that 50% range, which is a classic pullback in Fibonacci. Possibly can get down to 84.30, which is a 61.8% pullback. What you might want to do with this particular stock is wait for two things. One, for the RSI to move over 50, which we would say is very, very positive, or you get a weekly trade triangle that kicks in. Either one of those things. But there we are in a buy mode. If you want to take a shot at buying this particular stock right now, the risk is very low in our opinion. So they're the three stocks we're looking at. Again, we're 55 as a trading range, and I think we just need to see a little more strength coming over the 50 line or our weekly trade triangle kicking. Now here's what's frustrating everybody. We've got a very mixed bag here with the equities. This is the Dow Jones, and you can see it's minus 70. So it's like a trading range. You've got the weekly, which is down, which means you should be out of the market. But the biggest frustration here has really been, I think, this sort of go nowhere right here. It just sort of locked in this range since, I would say, February of this year. So that's one of the frustrating things that happening to this market. It needs to get out of this range. One way or another, if we're patient, it will make a change of direction, or it'll either continue on the upside, which is right here, or we'll see this green triangle turn red. Then we'll have a lot of pressure on the downside, or we'll see this red weekly trade triangle turn green and we'll be up and running on the upside. My gut feeling is we're going to see a turn to the upside. I think the Greece thing has been largely discounted to the marketplace, and I think we can see the RSI go back over 50. We want to watch that very carefully. If we see that happening, then you probably want to get involved with this. Again, look at the weeklies. That's going to tell you what's going on. But right now, we've got a trading range, 60 score. Pretty much the same thing is happening with the S&P 500 cash. You see just moving sideways since February. Really nothing going on. It's very difficult for a lot of traders to trade these types of markets because there really is a trading range. You have to be very, very nimble. But the reality is you could look at some of the stocks that are doing well. Bank stocks are doing extremely well. Strong trending. Watch those as well. Nasdaq is looking a little brighter, I would say. It's not totally out of the woodwork yet, but here's what we're looking at in the Nasdaq, and that is we do have the index just inching possibly over the 50 line. It needs to have a stronger close today, obviously, to get it over the 50 line, a couple of strong closes. But the weekly trade triangle is definitely in the red, indicating you should be on the sidelines, and a 55 is a trading range. So again, you've got a situation where you really are in a situation where you're really going into this sort of like trading range. It needs to jump out of this range. If we clear this, obviously the 5100 level on a closing basis is going to look very, very good. And you're really not that far away. So let's watch that very carefully. The Greek situation, as I mentioned earlier, could be cleared up. And it could be a positive for the market. Everyone's sort of discounting it, but it may have been discounted heavily already. Let's move on. This is crude oil. This is July crude oil. You can see it's sort of, again, you've had the move up. We've talked about this before. You had the move up, and you're sort of basically pulling back support trading range right now, but it looks like as though it wants to go higher. All the trade triangles are green, indicating a higher level. We're just flat on the 50 line. That needs to pick up a little bit before we can get some momentum on the upside. Gold has done nothing but frustrate the bulls on this case. You can see we've been below the 50 line here now since really the late part of May, I should say, right here, and it really hasn't gone anywhere to speak of. We're sort of in a 100 minus mode, indicating a downtrend, and it looks as though potentially we're just rolling over again, which could not be good news for the bulls in this market. But again, let's watch this very carefully. Things are dynamic. You've got some very interesting players in this market, and I think we could see potentially another break or another rally. It sounds nebulous, but the reality is right now you should be either out of the market or short. Our last market for the day is the euro dollar against the dollar. Euro versus the dollar, I should say. And you can see right here, this is really the whole ball of wax. It's right here, this level right here. I could see this market actually still continuing up. Our trade triangles are still negative though, however, and I think you want to watch it very carefully because we're above the 50 line, and that's indicating a little bit of a strength, but nonetheless, it's really in a big choppy trading range as opposed to the strong trend either down or on the upside. So 65 is a trading range, so watch that very carefully. Hey, I'm Adam Hewison. I'll be back tomorrow. Thank you so much for taking the time to watch this video. I hope it's of help, and check out Amazon, check out eBay, and check out Alibaba.